So the original development of money was to be able to do those sort of transactions over a period of time. So if somebody did something at the beginning of the month, there was some representation of value over time, and then the ability to perhaps trade with a village 5 miles away where some of those people weren't present, which is how we developed the basic monetary system, which all sorts of things were involved in money, gold and silver being the most widely used one. Then at some point, the paper monetary system developed, which was actually started off as a promissory note for gold and silver in a goldsmith's vault. And after a while, that started becoming as a more convenient way of exchanging the value, because it was a promissory note, i.e. a right to get the coins out of the vault, which you could pass between other people. And then unfortunately, the fraud crept into the system, whereby more promissory notes were printed than there was actually gold and silver in the vault, and that was lent out at interest, so people were paying interest on money that didn't exist. And that should have been stopped at the time, but it wasn't. And something which doesn't make sense to me, and I would say I don't think it can make sense to anybody, is that the system legalized something which was actually universally, naturally wrong, i.e. fraudulent. So that's then kicked off the fraudulent system, and then it got even worse with what is known as the fractional reserve banking system that we have now, whereby new money is not actually created, it's either printed or created as computer zeros and noughts and ones on computer terminals by people borrowing more money, or what they think is borrowing more money. So fraud is actually happening on a daily basis in the banking system, which people are not aware of, and most bankers are not aware of. And this is all available to study if you go back to the basics of the monetary system and very, very basic monetary theory, which, by the way, is not taught in schools and not taught in universities. And on top of that, you have another angle to it, is that governments gave away the sovereign right to mint their own currency to banks which were private and still are private institutions, such as the Central Bank in England, known as the Bank of England, the Federal Reserve, which is a private organization. And if you imagine a monopoly game which doesn't have any money to start with, and by the way, if you study history, part of the reason for this is all to do with governments and monarchs going bankrupt or not having enough money. If the only source of money is an external source lending you money which has been created by them, and the government owes that external source that money back with interest, the question is, where's that interest supposed to come from? Because there's only so much money inside the game. So as there cannot be any source of that interest, the system cannot possibly work, and that's already the case from the very beginning. Because the only way to get more money is to get money from externally, and if the only source is the lender from outside, then you'd have to borrow more money, which you then have to pay interest on the interest. So basically, it's a system designed to fail. It's flawed at the outset. However, people haven't noticed it because they keep on printing more money, borrowing more money, which creates more money by the fractional reserve banking system. And in the lifetime of most people, you don't see that over the longer hundreds of years that this system is designed to fail. And there's a brilliant book that's come out recently called Crisis by Design. So that goes into more detail about how this system cannot continue. And every now and then, as Voltaire said, the fiat paper money, which is no longer linked to gold and silver, fiat paper money will eventually revert to its intrinsic value, which is zero.